Like I've mentioned before, technical analysis or strategy is not an edge. For you to have an edge, you must have a proper SOP, a guideline to follow. Our edge is technical analysis, fundamental analysis, risk management, and also the psychological side of trading as well, right? So what I'm going to show you guys is literally just one part of the edge that we...
I got a question. Are you going to share the SOP with us?
Yeah, absolutely. Obviously, technical analysis is useful, right? You must be able to do your technical analysis correctly for you to actually see some good results, but you also must rely on fundamentals as well. And you also must have a strict risk management plan, all right? You can have a good strategy. Say if you take 5 trades, if you win 3 out of 5, you can still blow your account. You need proper risk to reward ratio. You need to know that this is not gambling. This is not a quick get rich scheme. As soon as you start, you're not going to make millions, right? It takes time, to master the skill set. And more importantly, right, the way to look at it, I would say, is that the average individual retires at what, 65, 70, right? So even if it takes you 4 years, 5 years, even 10 years to actually fully understand trading, to actually go full time, most of you guys probably in your early 20s, and early 30s, right? So even if it takes you like 4 years, 5 years, or even 10 years to actually manage to, if that is your goal, of course, right? Because there's nothing wrong with working at a 9 to 5. I've done it for 12 years of my life, right? Don't let anyone tell you, oh, you have to quit your job or whatnot. But if you see yourself going full time with this, right? Just what I'm trying to say is you must be extremely patient with the skill set, because it is going to be a bumpy road, right? You're going to have good days, bad days, and then some days where you don't make anything at all, right? Like I always tell people, investing and trading is not like a fixed income. Once you go to your job, once you clock in, you already know how much you're making next week or the next 2 weeks, right? And when it comes to trading, right, you have no idea how much you're going to make. If someone tells you I'm making 20K every single month, they're probably lying to you, right? So you might make 20K this month, you might make 10K the next month. Obviously, it depends on your account size. You might make 10K today and you might not make anything tomorrow. That's why we have an SOP, a guideline that we follow. Some of you guys might use TradingView. I use MetaTrader 5. I've been using this platform for the last 6 years, and I'm very used to it, right? So it's up to you guys if you guys want to use TradingView or MetaTrader 5. We have instructors that's going to guide you guys with TradingView, and we have instructors that's going to guide you guys with MetaTrader 5. All right, I'm going to dive into it. I always start my analysis on the highest time frame possible, which is the monthly time frame. There's something I'm going to put you guys on real quick. If you trade with the trend, with the overall trend of the market, you're already beating 95% of every single retail traders out there, right? Because most of them, they are going to counter trade. They're going to make some money today, lose some money tomorrow, make some money today, lose some money tomorrow. But if you trade with the overall trend, as in like if the market is bullish, you only look for buys only. If the market is bearish, you look for sales only, right? So that's why you gotta trade with the momentum, right? That's very important, guys, right? I'm going to start on the monthly time frame. Let me zoom in real quick. So right now we're currently looking at GBP USD. That's one of the asset or currency pair that we trade, right? So what I do on the monthly time frame is that I keep it very simple, right? I don't trade with many lines and trend lines left and right. But I'm just going to place my key supply and demand level, right? A supply level is going to be a level at the top. It's going to be a zone where as soon as the market goes for that zone, there's a good chance that it is going to react to it and it is going to drop, right? A demand level is going to be a support level, right? As soon as the market goes down, and it's probably going to react to it, and it is going to go up, right? So that's what I'm going to do on the monthly time frame. I'm going to add my level. I'm going to place my monthly support, aka my monthly demand level, and I'm going to place my monthly supply level. You have the coffee?
Oh, I thought X brought it to you.
No, I don't think so. Yeah.
Oh, I got it.
And then, sorry guys, I'm going to place my monthly supply level, right? So as you guys can see right here, right? Each time the market goes for 1.37204, react, goes all the way down, right? You'd be looking to sell at a supply level, and you'd be looking to buy at a demand level. When you buy, you're going to expect the market to go up for you to make money. But when you sell, you're going to expect the market to go down for you to make money, right? So this is very basic, right? But you don't buy and sell at supply and demand level. You need more confluences, aka more confirmations, before you place a buy or a sell, right? But I'm just giving you guys the basic for now, right? So that's all I'm going to do on the monthly time frame, right? And then now I'm going to scale down to the weekly time frame, right? So I'm going to start my analysis on the monthly, and then go down to the weekly, go down to the daily, go down to the 4 hour, and go down to the 1 hour time frame, right? I do take my time when it comes to doing technical analysis, right? Thank you so much, Mark. So I'm all done with the monthly time frame. So now I'm going to scale down to the weekly time frame, right? I'm going to zoom out, of course. So on the weekly time frame, guys, what I look for is the overall trend. I'm going to ask myself, is the market is bullish or bearish, right? When I tell you, if you can tell the overall trend, and if you trade with the overall trend, that is going to save you so much money in the back end, and that is going to make you so much money as well, right? Yet again, this is just technical analysis, right? You don't just rely on technical analysis. You have to also rely on fundamental analysis, as in what's going on around the world and all that good stuff, right? So if I zoom all the way out, as you guys can see, right, the overall trend on GBP USD, is bullish, of course, right?
Real quick. Bullish and bearish. What do they mean?
So bullish bullish uptrend, bearish downtrend. Thanks, Mark. Right? So the overall trend is in an uptrend, right? In an uptrend, you'd expect the market to go up and you expect to buy, right? In a downtrend, you expect the market to go down and you'd be selling for you to make money, right? But there's an overall trend, there's also a current trend. The overall trend on GBP USD is bullish, but the current trend, right, is bearish. Does that make sense? Right? So I'm done with the weekly time frame. I know what the overall trend is, and I also know what the current trend is. So now I'm going to scale down as well to the daily time frame, guys, right? The daily time frame, that's where you're going to spend the most amount of time doing your TAs, and you must get the daily time frame right, because if you don't, you're going to lose money, right? So we heavily rely on the daily bias, right? So on the daily time frame, based on what I've just showed you guys on a weekly, on a monthly time frame, what would you say the trend is on a daily time frame right now? Bearish? Okay, that's good. You guys are learning. I like that, right? So it is bearish on the daily time frame, right? So now I know the overall and the current trend on the weekly time frame. I also know the trend on the daily time frame as well. And I actually called this trade for the team, if I'm not mistaken, a couple weeks ago or last week, and it did play exactly as expected, right? I told the team to sell it around this level, and it did drop all the way down, right? And I'm going to show you guys the trade that I called for the team, right? So on the daily time frame, you go for the daily bias, right? If the market is bearish on a daily, you look for sales only. If the market is bullish on a daily, you look for buys only. Like I've stated before, if you counter trade, I'm not going to say that you're not going to make money, but what I'm trying to say is if you counter trade, you're going to lose way more trades compared to winning, right? Because when you trade against the market, right, is you pretty much telling the market that you have enough capital in your trading account to place a buy in a heavy downtrend for the market to start buying. And I'm telling you right now, even if you have a couple millions in your account, you cannot place a buy in a heavy downtrend and expect the market to suddenly goes up. It doesn't work like that, right? So the best case scenario is to go with the momentum, right? So now we know the daily is bearish. So what I'm going to do is I'm going to place my key market structures, right? In a downtrend, you're going to get lower lows and lower highs, right? And your only job is to sell at the lower high, right? That's literally like it. We trade so simple. Like, you guys are going to love the way we do things here, right? So obviously the market is currently trending down, right? That doesn't mean you're going to be selling it, at any given area. You have to sell it at the right time, right? That's what trading is about, right? You have to be able to sell and buy at the right time for you to make money, right? So now you might be asking yourself, how do I know when to sell and when to buy, right? If the market is bullish, you're going to get higher lows and higher highs, and you'll be looking to buy only at the higher lows. If the market is bearish, you're going to get lower lows and lower highs. You're going to be looking to only sell it at the lower high, and that only going to make you extremely patient and not look for bad setups, right? Because now I know that I'm not buying because it is bearish, and I'm only selling if the market comes to me and create the proper structure, which is the lower high in this case scenario, right? So now what I'm going to do is I'm going to grab my rectangle boxes, right? I'm going to place a rectangle box at the top, right? This is going to be my high, right? I'm going to place a rectangle box at the very bottom right here. This is going to be my low, right? And then I'm going to place a rectangle box up there. This is going to be my lower high, right? So my only job is to wait for the market to retrace, to come to me, to create the lower high for me to get in.
Sorry, I'm confused. So you did mention that you don't want to trade counter trend.
Yeah.
And you did mention monthlies are uptrend.
Monthly supply and resistance. Weekly is overall trend is bullish. The current trend is bearish, which means there's a reversal happening.
Right. And then you mentioned that you signaled a trade last week or sometime where you told them to sell.
Yeah.
So isn't it counter trend, or maybe I'm missing something?
No worries. Great question, right? So I'm going to show you guys something real quick. Let me zoom out as well, right?
You started on the monthly, bro?
Huh?
The month. You started on the monthly. I think that part messed me up a bit.
Okay, you're going to monthly. Yeah, talk to me.
No, so on the monthly, we're bullish on the monthly, right?
Yeah, we don't look for the a trend on the monthly. On the monthly, we place our key supply and demand levels, right? Because you have to understand, right? We do not hold our trades for months, right? Maximum probably a couple weeks, right? So we don't really trade with the monthly, but you guys also should be able to tell. Even if the overall trend is an uptrend on the weekly time frame, because we trade with the weekly trend as well, right? You have to understand when there's a potential reversal happening. I'm going to show you guys what I mean, right? Yes, it is. If you zoom all the way out, you're going to see there's a overall bullish trend. But once you zoom in, right? I probably should have used this little line to show you guys. Once you zoom in, right, if you grab your trend line, I don't really like using lines that much. You can easily see there was a break of the uptrend, right? That's why I was looking for sales to answer your question, right? So you had a touch, went all the way up. You had a touch here, up, touch, went all the way up, came back here, touch again, went all the way up. Then you finally had the break of the uptrend, right? So it is no longer trending up. I probably should have mentioned that, right? So that's why I started looking for sales on the lower time frames, right? But I don't really use lines too much. I just go with the market structure, right? So I can easily tell there was a break of the previous structure, of the weekly structure right here, because this was the most recent structure, and there was a break and a retest of that structure. Since then, it has been going down. But yet again, you do not use the weekly for your entry price. We use the 1 hour to place our entry price, and I'll probably go over that in a bit as well, right? Yes, if you zoom all the way out, you'd see that the overall is bullish, but once you zoom in, you'd probably realize there was a break of the uptrend and the market is no longer trending up. It is in a heavy downtrend right now, right? But if you had to trade on the monthly time frame, right? On the monthly time frame, right? What would you guys call? For some of you guys probably been trading for a while. What kind of trend would you guys call this? Consolidation, right? So imagine if you're placing your trades, your setups or your signals based on the monthly time frame, you probably would have been like, you know what? Let me just wait for a break and a retest and to see if it's going to go bearish or bullish, right? But we just place our supply and demand levels on the monthly, and we scale down to the weekly. We're going to look for the overall trend and also for the current trend as well, right? On the daily time frame, you have to make sure that the daily trend matches the weekly trend as well. As you guys can see, as you guys can see, the daily trend does match the weekly trend, right? You're getting heavy bearish momentum on a daily time frame, right? And I'm going to show you guys also after the daily, you go to the 4 hour, you go to the 1 hour. That's where you start looking to actually place your sale in this case, right? There's a lot more that goes into it, right? You must be able to analyze each time frame separately, and you must be able to know what you're looking for, right? So one crucial thing that we look for is that we're going to make sure that the 1 hour time frame matches the daily time frame. This is very important, right? Because on the 1 hour time, because if we're bearish on a daily time frame, there's a good chance if you scale down to the weekly, to the 1 hour time frame, the 1 hour time frame might be bullish, right? So now we're going to wait for the 1 hour to catch up to the daily. Once it does, I'd say like there's a 95% chance that you're going to win that setup, right? But nonetheless, any more questions, right? So on the daily time frame, we're getting lower lows and lower highs, and the reason I'm saying is to be patient enough to trade with the overall trend is that it is going to make you wait, right? We already know that we're not looking for buys. So even if the market is currently at a good support level, I'm not interested because out of nowhere, I can easily break that support level and keep trending down because it is an overall uptrend, right? So my next, obviously I still feel like, GU has to create under a lower low for it to go up to create the next lower high, right? So your only job is to wait for the market to come to you to create something lower than the previous structure for you to get in and for you to keep on selling it, right? Once you trade with the momentum, you can easily go to sleep and not worry about if the market is going to switch up on you, right? Does that make sense? Okay. So this area was a good potential zone. You have a high, you have a low, and you have a lower high. So now we use something called the Fibonacci tool retracement to help us with our entry price, right? So we typically, we usually like look for to get in between the 50 and the 61% level. And I'm going to show you guys how we do it. If you grab your fib, if you place it from the most recent high, right, to the most recent low, right here. As you can see, the market created a low. The market created a high, then followed by a low. Then it went all the way up, right, to create something lower than the previous high. That's why this is called a lower high, right? And one thing that you guys must see at the 50 and the 61% level, if you're looking for a sell, you must see the market create some type of ceiling, some type of resistance level between the 50 and the 61% level for you to get in. And like I've mentioned before, you don't blindly, as soon as the market goes for those two levels, you place a sell, right? You have to wait and see how the market is going to react between those two levels, because for all we know, it can easily keeps on going up, right? But if you see the market is failing to actually goes past above the previous high, then that is a good indication that you should get in and place your sell. And also I'm going to show you guys how you can scale down to the 1 hour time frame to make sure the 1 hour time frame is telling you the same story as the daily time frame. That's something we've actually implemented a couple of months ago into a strategy as well, right? Feel free to stop me at any given time, guys. Yeah.
How do you place Fibonacci? Do we take the current high and the lower low?
Yeah, so you go with the most recent. If you're looking for a sell, you have to start it from the most recent. In this scenario, right, this was the only high that the market created. You have to place it from the high to the low to give you the lower high. So lower high. Then now you're gonna have to do the same thing again. I'm going to show it to you. Right. I'm going to grab more of my rectangle boxes right here. Right. So now I'm going to do the same thing again. The market went down to create a lower low, something lower than the previous low, right? This low is lower than the previous low, which makes it a lower low, right? And then if you grab the fib again, if you place it from the most recent lower high to the most recent lower low, let's see what we got. So I'm not sure if this was proper structure. Yes, it was. And the market retraced again to react at the 50% level, right? And then you would sell it again, right? This would have been a good potential selling zone as well, right here, right? So now you have a high, you have a low, you have a lower high. You'd place your sell and you'd get out at the previous structure, which is probably going to be the 0%, or you can hold it all the way to the minus 27% to create a lower low, right? This can be your TP1, this can be your TP2. And then you'd get out and you're going to do the same thing again, place it from the most recent lower high to the most recent lower low, and then you'd be looking to sell it again a second time. And all you have to do is keep on repeating the same process, right? So now, but the way I trade is I'll probably hold it for a long period of time instead of closing in and getting out. That's because that's how I trade. So now you're going to place this right here. Let me zoom out. you have the high, low, lower high, lower low, and lower high. And like I've mentioned on the weekly time frame, the reason I started looking for sales, you can clearly see there was a break of the trend on a daily time frame as well, right? Touch went all the way up, touch went all the way up, touch went all the way up, came back here, touch went all the way up. And this is very important, guys. This is why you got to be able to tell when there's a reversal happening in the market, right? As you can see here, touch went all the way up, touch went all the way up, touch decided to go up, but failed to close above this structure. Because here you're getting higher lows and higher highs, higher lows and higher highs, higher lows and higher highs. But here you have the most recent higher low. Obviously, you'll be looking for a buy. But as soon as you see the market cannot go past this previous high and instead created a lower high, then you'd be looking for sales. And also, you also had the break of the trend and a retest of the previous uptrend as well. And also another lower high was created below the break of the trend. Right, so you have a lot of confirmations telling you that GU is bearish, and that's why I decided to call it. And then we did make some money on it, right? Right. This is why I called the GBP USD setup for the team. All right, you had this thing was created right here. So high, low, lower high, lower low, lower high, and another lower low was created. And all you have to do again, guys, right? Grab your fib. And I'm going to scale down to the weekly time, to the 1 hour time frame to show you when to actually place the sell or the buy, because this is just the daily time frame. I'm giving you guys examples, but you don't place the buy and just based on the daily time frame. You have to make sure the daily, so you have to make sure the 1 hour time frame also aligns with the daily time frame as well, right? So if we place it from this to that, right? As you can see, the market went this. And this is one of the reasons why I called this GBP USD sell, right? The more touches you, obviously if you're looking for a sell, you want the market to create some type of resistance level between the 50 and the 61% level, right? The more touches you get at the 50 or 61% level, that is a good indication that the market is telling you it is not trying to go past the previous structure, right? So as you guys can see, right, we have 1, 2, 3, 4, 5. Even you can even count all this if you want, because that is still at the 50%, right? The minute I realized the market created that beautiful structure as well, I called the sell for the team, right? I think, if I'm not mistaken, TP, right? TP1 was, I only use one TP, which is at minus 27%. Called the sell. And then final TP was at minus 27%, which means this is where the next lower high is going to be created, right? We have this, yet again, we have this high, low, lower high, lower low, lower high, lower low. And then this right here was where I called it. This was the most recent lower high, all right? So you take the sell, right? Your stop loss will be close to the 78.6%. Or stop loss on average for currency is about 50 pips. So let's say if you have 1K in your trading account, you'll be risking about $50, which is 5%, right? And our TP is always going to be 3 times more than our stop loss. That is very important, guys, right? So which means you're giving yourself room to take losses, because you are going to take losses, right? Let's say if you take 4 trades, if you lose 3, if you win 1, you're going to be at break even for the week. Right, and this is why when I take a lot of losses, but right, this is why I don't panic when I take losses, because I need a couple wins to actually make enough for the entire month, right? So you'd place the sell, right, and then you'd probably hold to the 0% previous structure or minus 27%. And see all this, right? And this is what I saw.
Yeah.
This is what I saw before the entire move happened. This is what I saw, right? Actually, yeah, this is what I saw, right? So you place the fib from this to that. Does that make sense?
Yeah.
Right?
So the fib, right? Is there a 0 level in the middle? Because
yes.
It seems like
you
put the whole thing, right?
Yeah, the 0 level, that's where your TP is usually going to be at.
So that's the level, okay.
Yeah, right? So your 0%, you'd be looking to get out, you'd be looking to actually start taking some money off the table at the 0%, and minus 27%, that can be your final TP.